Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay. I can hear you loud and clear. Welcome back at the buzzers.
Welcome to our buzzer beaters. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to, I said our goal as traders.
It's on your mind.
Something's on my mind. Believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. I've been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experience, some knowledge, and hopefully help you become a better trader.
Thank you for that, Coach Paul. Dolby's Drumsticks. I love all these new chat names. Coach Jay's burner account, Jack's Pilsner, Dolby's Drumsticks. Chat is getting creative. I love to see the interaction with the community that we're building here. But yes, that J trade in gold. We will talk about that one. Dolby's Drumsticks. I was in that trade at a target. It was a pretty good one if you guys did catch. But you are all our chat, our audience. Let us know how you're doing today. Are you up on the day, down on the day? Did you follow your plan? Did you trade somebody else's plan? What did you learn from today? Second day of October, second day of Q4. Still a lot of trading left to be done in the year. So however today ended up, remember it's only one data point. Well, it should only be one data point as long as we manage our risk. Continue from there. Design it. Donald in the chat. What's up? Dan Trader, as always, at the top of the chat. Good to see you here. Good to see everybody here. Let's get into the news. Government is shut down. So as far as planned numbers goes, we may not be getting a lot of those. We're supposed to have NFP tomorrow, but the government is still shut down. We have the U.S. House Speaker supposed to be meeting with Trump at the White House right now. See if we can come to some sort of deal. But planned numbers right now are not to be found. So we did have some Fed speakers. Outside of that, not a whole lot of news. Not a whole lot of news that I have to talk about. Coach Paul, anything you got on the news?
No, and I think we better get used to this government shutdown. My feeling that, and so we will not be having these government numbers coming out. Maybe that's good, but nothing. I didn't know there was talk that they were on the Hill, but I'm not hopeful on anything being settled there soon. But other than that, I don't see any big news that would change. Except for maybe there was some news in gold that I didn't see, but
the news was we made all-time highs, and they took profits. All-time highs made in the S&P, the NASDAQ, and gold today. All of those markets made all-time highs and pulled back a little bit. What's a little shutdown? Never heard anybody. Yeah, I mean, hey, we heard the last shutdown, the market, the S&P rallied 10%. Let's see if this one is the same. Bacon in the chat says $60 away from blowing up. Trade smaller, take high quality setups. You're able to of drawdown left to, back to break profitable. Learn a lot as a trader, more than you learn finding another indicator, listening to another influencer, whatever it is. You're able to recover that account. You're going to learn a lot about yourself as a trader, which is most important. You got to know how we make decisions. So try to recover that. Allen up 777 bucks, lucky sevens on 5 combines on a short NASDAQ. My mic keeps cutting, guys. I'm sorry. Let me fix that.
I don't hear it.
Fix that. All right, it should be better now. It should be better now. Dolby's Drumstick says J trades only. I mean, that's a strategy. That is a strategy. Who do we have? Someone in the chat was only taking those trades in a combine and an XFA and doing pretty well here. Water fasting results, 261 red in the day, didn't stay out long enough. 261 is not bad. Measurable day. Courtney had a green day, small technical blooper, but still ended green. That's all good. Always good. Rich was long gold. Took a trade early and it turned to hit my stop loss. Then that locked the account. There you go. Risk management. Risk management. 5 minute. The opening range trades to the short side worked really, really well in the equity.
Yep.
So why don't we take a look at the charts? Go ahead, Coach Paul.
Yes, they did.
Really clean trades. Really clean trades. There are 36 different markets we can trade with Topstep accounts today. To the downside, we had RBOB gasoline futures down 1.69%, silver down 1.74%, and heating oil, our biggest percentage mover to the downside, down 2.35%. To the upside, we had soybean meal up 1.94%, micro Bitcoin up 2.92%, and micro Ethereum up 3.62% for our biggest percentage mover to the upside. To talk about our big four, we had crude oil. They just waited for me to get into the swing trade, Coach Paul, and they kept selling it. Down 1.68%. I actually did cut that trade. I cut it early. It saw some things I didn't like. S&P down S&P up 0.06%, pretty much flat. Gold down. It's crazy to even say this. Gold down 0.41% after making a new all-time high today.
It's only down 0.4%.
Right. That seemed like a dramatic move, and it was, right? We'll see it when we get to the charts. It was an 80-point move. I almost think we should start with gold.
No, let's do it.
It was an 80-point move, but after making an all-time high, gold was and it is continuing to be probably the best market to trade this entire year. And then we have the NASDAQ up 0.39%. All three of those markets, again, gold, S&P, and NASDAQ making new all-time highs. The Dow did not make a new all-time. So let's take a look. Why don't we start with gold? Presented a bunch of great trades today. Take a look at gold starting last night. Actually, let's start with the daily. What are we seeing on the daily, Coach Paul?
We look at that daily and a nice correction. It's not engulfing. By the way, we finished in the middle of the range. So it's going to be dramatic, but on a relative basis, it was a nice correction. Still, there's nothing there. It's not an engulfing. Yeah, I guess it took out yesterday 2 days of range, but that's it. And then settled right in the middle. Looks like we had taking a nice rest for buying, but trend is still solidly up.
Yeah, trend is still up. We closed slightly lower than we opened after a big, round trip kind of day. Made a new all-time high, 39.2030 in gold futures. Looked just above the prior all-time high, which was made yesterday, and a very aggressive sell-off. We'll take a look at this when we get into the shorter time frame charts, but a really strong sell-off in gold there. Still holding up pretty well. So let's take a look at the 30-minute chart. What is holding it up? Could it be? Could it be?
The fresh buy there.
Yeah.
And look at it was a J trade. Look
Yes,
at that's like a big middle finger. Was that right on the lows? Yeah.
no, so this big one is here.
All right.
There is one that shows up on the 3-minute chart that is
All right.
highest
Wow, look
3-minute
at
volume,
that.
but yeah.
That's our biggest selling. So it's something to pay attention to, at the least. Took us in settled. Well, we settled briefly below the 200 moving average. But it looks like some entity had that selling in mind. Funny, it came just off yesterday's high. But I'm just more impressed by the volume. That's not rollover volume. Sometimes you can get fooled on a rollover. It's not. It's
What do you mean by
what it was.
it's not rollover volume?
So this could be great selling that stopped. This could be, and I'm right here. It looks like a great buying opportunity, or at least buying with less risk.
One of the
Kind of
highest
looks like
volume.
last time we went through the 200.
Yeah, very similar, very similar. One of and I'm looking back, it's one of the highest volume candles we've had all year in a 30-minute period. Um, it's in the top 10 from what I can see right now, just kind of quick going through this chart here. That is some huge volume in that 30-minute candle, but it brought us right back to that 200 moving average. Like you said, it's similar to the last time we were kind of down here. Spent a little bit of time down there, but we did recover eventually. Um, but man, what a sell-off.
Yeah. Without any, and it's at all time highs. I mean, it's possible. Look at 2 days ago, similar. What was maybe with not as big a volume, but we made the all time high and got a hit. But this is to be expected at these levels. These are, I mean, it's relative. Percentage wise, they're about the same. Price wise, at almost fourth, at the price we're at now, it, it is dramatic. And that's if you were using a, you weren't using micros, you're using 100 ounce.
Oh yeah,
Today's range,
might have had some trouble.
yeah, you might, or you better have a big bank account. But actually, great. It was a great at the end. It was a decent buying opportunity.
Yes, it was. If you guys were having issues with my audio, just let me know. It should sound better now. Part of that is also just my voice. Not feeling great, so I'm losing my voice a little bit here. But like Coach Paul said, we had a very aggressive sell-off after those all-time highs. Let's take a look at what happened last night. Gold, I know Dakota was looking for a short last night under 3,900s, and it gave maybe a decent reason in the Asia session to short it. Really no directional price action in the overnight session until we got to, of course, our friends in London, who just get things going. They know how to party in London. They get the markets going. We left that London opening range to the upside, made a new all-time high right on the equity open, Coach Paul, and that was
Yep.
about it. If you want to talk about urgency, and if you ever hear me and Coach Paul use the term an urgency trade, and you're wondering what we're talking about, here is that example in gold. Urgency opening range breakout trade. Now, some opening range trades, people are going to look at them and they say, oh, price broke the range, so it should continue. But me, I believe that volume moves the markets, and aggressive volume during an opening range trade is going to dictate how good of an opening range trade that ends up being. And this one, and if you put this puzzle together, you almost couldn't get a more perfect recipe, Coach Paul. We get tag above an all-time high, right off the equity open, where we know there's going to be some decent volume coming into gold, and then an urgency trade right away.
And,
And that volume left this range. This is the first 3 minutes. We could probably look at it on a 1 minute.
well, there was urgency. I mean, it was within the first 5 minutes.
Yeah,
But it was interesting that the break came in U.S. It didn't come in, and the U.S. market has not over the last year not been the dominant session. Let's see what we broke. What was it, 2 days ago? Did we get that same when we had that big break? Was it 2 or 3 days ago?
in gold.
Where did we have it? We just no. There. Did that happen there? That happened in New York.
Yep, very
Not
similar.
as
Oh, here's a
dramatic,
huge
but
one. Now this one is pretty dramatic.
yep. That's yeah. That was US Open.
Yep.
Okay. And now, so if we separate those, right, and when we talk about passing the deck, the U.S. has been in the U.S. market. We've had dramatic selling.
Yeah, yeah, we have. And today was no Different. Rich in Bedside says the 820 open wasn't urgent, but flashed along, then rejected. Let's take a look, right? So here's the difference. The 820 Central Time open, which we take the opening range trade every morning on Topstep TV. This trade looked like a long price-wise. Price-wise, it actually left the opening range to the downside first. And this is why I think we added that, VWAP to the opening range, Coach Paul, because on a price basis, I'm short here. On a volume basis, there's really no direction, especially no direction to the downside off of this. There's no volume moving this yet, and it started to move it a little bit going into the New York session, but there's a big difference in looking at these two, where this volume is dictating that, hey, this is aggressive, and you may have to wait for confirmation that the volume is saying one thing, but if we can look at it, when volume gets that aggressive, uh, you know, even if you don't get short, that's probably not a flow that you want to buy against.
Well, I didn't get short, but even if you bought it, here we go. You have and this, I think this is a huge lesson.
Yeah.
If we just go move that chart to the left so we don't see this break, and you just made a good point. Let's say you do the opening range breakout from the US. I don't. I do it from Shanghai, or at least Asian, because difference between the gold is a 24-hour, 7 days a week, 360. It never closes, literally the cash market. So, but if we use that, what is it, 720, 820 Eastern open, New York open, let's say, and you liked it, you bought it. Because you might get sick of hearing, we don't know.
Yeah.
Right?
Yep.
Or you might react like I did when I was younger, is how can I be right all the time?
Yep.
I'm not going to be any good until I'm right all the time, because there's an entity out there that's right all the time, and I got to get there.
They're called the exchange.
and so
that entity's right all the time.
Let's say you bought that. I think if you use the ATR, it made a 2-to-1.
Just long trade
on the breakout of VWAP. Or let's say it didn't.
Yeah, you did.
Let's say you did, and you wanted 3-to-1. But this is because you don't know. The only certainty we have is uncertainty. In this dramatic break, there is nothing wrong. Actually, you should be long if you at the high.
Right.
You made a good decision before that. It's at all-time highs. I'm long. But exit. When we talk about this, these are principles of consistent winners. You're 2-to-1. Let's say you went 3-to-1 risk reward. You had a beautiful loss. Try to remove that stigma that was a losing trade.
Yep.
That was a good loss.
Great read.
It's a great, it didn't make it, but I lost well. Because blown accounts are days where we lose poorly. And this is the game. You can't let your eyes get that kind of loss. If you get stubborn or add to a loser or go full tilt FOMO or go full tilt, double tilt. We've all been there. Everything's gone. You could have traded this perfectly for a month and you give it all back. So one of the things, looking at that chart, look at those breaks, whether you're trading gold, NASDAQ, understand why it's important to predefine your risk, have a stop. One of the beauties of trading options is you can choose to have a known risk.
Mm-hmm.
Now in futures, why it's so volatile is most of the time there's really unfettered risk. Well, you can, if you're not using proper stop management, you're gambling. And this is the evidence of that.
Absolutely. Let's take a look at the 30-minute because we did come down. We tagged that 200 moving average, ran it by a little bit, but with as aggressive as this selling was, I'm not too surprised to see that we ran it by a little bit. And this is where we had that question from DeCara last a couple of days ago, Coach Paul. Do you just buy it off the 200? You could. Let's see, right? If we are buying it off that 200 moving average, just setting a price there. Let's go with the Coach Paul School of Management. The ATR is on the 30-minute. At that point, ATR was 11 points, 22 points. He does it again. He does it again. It survives. Now, do you get a 2-to-1? You don't, but I also don't think this trade is over. Right? This is probably a trade that we can look at for the next couple of days. But with risk based on market fluctuations and not based on your account, you could as simply buy that 200 moving average, risk 2 ATRs, and let the trade work. What's scary, Coach Paul, and why traders might not want to do that is because if I take a mini here and I risk 22 points, what? How many dollars is that?
If you well,
If it's a
on a
mini,
regular,
yeah, is that 2 grand, 4 grand?
$2,200,
$2,200. There you go. So yes, 22.
220 on a micro.
Yeah, so $220 with one micro, $2,200 with a mini, and then at that point, it starts not to make sense anymore, right? But we've seen the market reaction, and in this case, we saw a market reaction to that 200 moving average um, on the highest volume that we've seen in 2 months. So is it a surprise that it ran that level by a couple points? Not really, but if you, and this is why, somebody asked a question, what can you suggest for newer traders? If a newer trader can figure out how to stomach the risk of taking 2 ATRs on a higher time frame trade and just placing the trade, there's a lot to be said there. Um, Now you still need good trade location. You can't just put on a trade and say, "Oh yeah, 2 ATRs. I'll just let it work." But with good trade location, how many traders take trades in good trade locations and are so over leveraged that they can't give the trade the space that it needs to work out? Um,
Did that for a long time.
yeah, yeah, 100%. So this was a really good one. To mark out that
Well,
200 moving average. Go ahead, Coach Paul.
let's look at it. Yeah, mark that out and go to a shorter time frame.
Mm-hmm.
Your favorite time frame.
The three. The 3-minute chart. Now, the highest volume candle we had of the day that made the low on the 3-minute was this one here. And I know there's going to be traders that were looking for uh, that J trade reversal, and that's a good spot to start to look. But what do we continue to have? Right, there's decent follow through volume, and there's urgency still off of that 3-minute. So, and that was right near. Actually, why did I just delete? There we go. I meant to delete this. Right, we have some urgent. We have high volume, which at that point was the low of the day, but we never got a close above it, Coach Paul. So for anyone who is looking for that reversal, and I'm one of them, I was looking for it, because I said the gold is in an uptrend. This is just a pullback. Nothing has changed fundamentally in gold from what I've seen. Actually, it's probably changed to be more fundamentally bullish than anything. So there is going to be a spot to buy the dip. I want to be patient in where that spot is. And shout out to Andre. And I said this the other day when we were on the show. But if you're listening to Andre, he's calling out 3850s like he's trying to get somebody to buy it. 3850. Anybody watching 3850s in gold? Gold, because the whole way down, he's like, gold's not done. Gold's not done. And he says, Hogue, gold is coming into 3850. I remember that level from before. And if we look back, 3850 was a nice spot to buy before in gold. So again, reading patterns. Shout out to Andre. The vocal pattern that we get from him getting excited about the market selling off tell us a lot. I actually did recover some of my day buying this first dip into 3850. Just looking for that reversal. But then we finally did get volume at the low of the day. It wasn't the highest volume, still above average at the low of the day. What's the difference here? We closed above this one. We closed above this one. If we look at the flow from the point that that volume printed, right? If we look at VWAP from the time this volume printed compared to the time that high volume printed, what's the difference? This VWAP continued lower. This one stopped, went flat, and then pushed us back higher, back to VWAP for the equity open when we initially sold off. So a little bit of a different trade. You had to be patient. There is a reversal pattern that presents itself in many of the markets that we trade, but you got to be patient for it. And if you were thinking, this Coach Paul, this is why we say we try to be patient and not to preempt trades. If I preempt along here saying, hey, that's the highest volume, it should reverse. Hopefully I manage my risk.
Well, if we put that 200 back on there and see where we close above 200 and take that risk so it can build, because remember this, we're going against something that's moving at the speed of light. It's like it's a collapse. It's not going to turn on a dime. So markets move from imbalance. There's an imbalance of selling. Look at the volume bars. Look at the candles. Maybe I have a flair for the obvious, but there's a big imbalance in that short term, in that 3-minute chart. It doesn't go from imbalance to another imbalance on the other side. It goes from imbalance to balance to imbalance.
Yep.
So when we have that kind of a drop, let's say you're being aggressive is taking the first settlement above it. So you're not giving it any time. It's pure price. I'm not saying it's good or bad. I'm just saying you're aggressive. So on a 3-minute, when's the first time it closed above?
Above this one here? Or the
on a 3-minute, the 200 from the half hour, that level.
Oh, got you. First time it closed above was right here.
All right. So what's the risk on a 3? So because I'm buying this thing, it shows some signs on volume, but this is pure price discovery. I want to buy it because I want to fade. You're fading.
Yeah, you are fading the market at that point.
Right?
Yep.
You're fading it. Okay. Let's say you're a fading trader. So if I hook it, I'm going to hold it. I'm not getting out 1-to-1. But the first time you're in, you have a risk of 2 ATRs, or it closes below that line. So if you got in and it closes below, how much did it cost you?
Got back in, it closed below that 200 moving average, 5 points.
5. So if you do a micro, it costs you $50. You do 2, it costs you 100. Now, okay. When's the next time it closed above it?
Next time it closed above that 200 was here.
All right. And then it closes probably another $50.
Yep.
So I'm down 100. But I like this. I'm buying this level. And I'm being aggressive. So, but it's still, notice it doesn't go to ATR loss. But I don't want to wait for that.
Right.
See, this is scalping, by the way. The next time it gets above it, the third time,
right here, doesn't cross back below.
Doesn't cross, and I hold it to the close. How many points do I make? How many dollars?
We're close to 20, about 17 at the highs.
So I make 170 on a micro, or just go to this lowest position. So on scalping, I took 2, but measured losses, and it worked. it's what I try to explain a strategy to try and buy that low where you're not taking unfettered risk. The biggest risk you take is 2 ATRs. And we didn't really get a clean J trade. I mean, the classic.
No, if this was higher volume at this low, then we definitely did. But when we did close, actually, we never closed above this high. So I'm keeping this candle for tomorrow.
Yeah.
This candle right here, this range, 38.81 at the high, 38.66 at the low. That is, you will hear me talk about that candle tomorrow during the opening call, if we're still trading around this, because that means a lot. Dominic says, how many points is the ATR? The ATR is going to change. If you see the ATR indicator over my shoulder right here, as I hover over the candles and the time changes, that ATR value is going to change. So, do you need to be staring at the ATR indicator the entire time? No, but when you get into a trade, let's say I get that trade signal that Coach Paul's talking about, we close above the 200 moving average, I want to get in long. The ATR when I'm getting in long is 7 points. So I'm going to take that 7, multiply it by 2, and that would be the suggestion for the stop. Like you just heard Coach Paul say, though, you can actively manage this. If you get some information early, you could always close out the trade. But that ATR value is going to change. It's not static. It does change over time. All right. Somebody asked, do I have a trade cap per day? I don't. It's more, do I see a good setup or not? And do I have the mental capacity to take that setup? Usually I'm done pretty early. Most days I'm done within the first 2 hours of the New York session. I don't put a trade limit on because I'm usually scaling in and out of trades, but it's usually, hey, do I continue to see good setups? What about you, Coach?
I don't. I have a financial limit, 12% of my total balance. Doesn't happen that often. If you're trading at the right size and not over leveraged, if you're over leveraged, you're probably going to get two opportunities or one.
Right.
The first one, you lost too much, and then you start going, I got to get that back. So you take the same size or maybe double it, and there goes the account. Rule number one, or cause number one, in my opinion, what blows up most accounts, that right there. So if I take smaller positions and give myself room, think of it, if you went and played blackjack and you have a bankroll, you don't bet half the bankroll or the whole bankroll on the first flip. You have to budget yourself. So, and that's the balancing act. If you think, I mean, you can do one trade a day and you're either right and you leverage it and you manage your account well. Let's say your account, it's 500, you have $5,000 balance. And I'm going to bet $500 on one trade. If it works, I'm going to get a 3-to-1. I mean, it's just, all right, I make $1,500. Now, I really can only afford one trade. Over time, it better be a high percentage, because if I get 3 in a row, which is what? The high probability to get 3 losing trades in a row, whether you like it or not. Right? Because we can't control when they're good or not. But proper risk management will help you define how many trades you can afford to take. Sometimes, and on the other side of the coin is if I only take, because I'm averse to losing money, I might be extremely tight and not allow things to grow. And part of it is taking too small risks. I'm going to do one micro, and I really want to make $300 and risk 10. Well,
that's a. Tough to do. Tough to do for sure. Let's take a look at the NASDAQ, Coach Paul. We did make a new all-time high, 25,180. What are you seeing here on the daily?
Oh, very bullish. Got a little ahead of itself. We have a candle that we closed at an all-time
All-time
high.
high close for sure.
Doesn't feel like it if you traded all day, right? It
No,
felt
it
like
doesn't.
felt like the gold beating. But let's run through a tale of 2 days, the upside and the immediate downside. What do I mean by that? We had a great move last night.
Some urgency
Or-
last night from the open. That volume left the range really early, pushed right to all-time highs without hesitating. We talked about this yesterday on the close. It was such a strong close yesterday that wouldn't be surprised to see some continuation above this 25,000. And that's exactly what we got. They bought it very early, pushing us to a new all-time high.
Yeah, that was. Now remember, coming into this opening, we were, what was the price? We were at 25,200 in that area.
Yes. So I want to talk about that a little bit.
Yeah.
Uh,
So that was my first level of resistance.
25,200.
Yeah.
So
25, literally 200.
we talked about this. Rich, you have a good one. We talked about this during the opening call. And Hogan and I were saying we had a really nice rally in the overnight session. We're going to need to convince some buyers to trade up here if we're going to continue. And what we saw, Coach Paul, was at 25,198, there was 800 contracts offered. At 25,199, there was another 800 contracts offered. So we're talking about 1,600 contracts in a 1 point range, right below that whole number level. And as soon as the market opened, the one that was at 198 chased lower. And I saw it at 180. And I saw it at 160. And I saw it at 140. So whoever was trying to sell an 800 lot was not able to get a fill. Done that example before on the show, but if they can't get a fill on that trade, they might have to trade lower, right, or go to market with that trade, and that's when we see that urgency. Huge opening range. This first 3 minutes was a 40-point opening range, almost 36 points. But even then, in the same case as we had in gold, we're just seeing continuation. Right back down to the Globex session open where we started the day, right at 25,000s.
Yeah, well, and it was so far ahead of itself. I mean, I don't know, and maybe I'm sure there's a data geek that can let you know if all-time highs in equities are made at night on the night session. What do I mean by that? That all-time high is on light volume, relatively. Right
Goes
now,
far, no one's able to experience it, so we got to bring it back so we can all get in.
we got to go test it. Yeah, it's got to tested by volume, not just price. There was literally at this point, we know there's no sellers. Who wants to sell this for long? I mean, the trend is up. So, but from a price basis, we were at that point 25,180. We were up almost 180 on the day. Well, the average true range is 264. So we opened up with basically 3/4 of a daily average true range
In an overnight low volume session.
on low volume. So that's why I like what you just did right there, putting regular trading set. It's so dramatic, and you just see it there. And we had urgency, and then there's an old school, what it's called an island top. So that first candle, it's on an island by itself.
Came right back down, closed the price gap from yesterday, right around that 25,000s, and we're looking at market's reaction to major levels. What happens when we hit that 25,000? That's where we found our buyers, right? So another example of being patient, waiting for the market to pull back. We got close to it, found a little bit of a bounce, but traded through 25,000 and could not get any follow through, and then we turned right back around. So, like you said, Coach Paul, it didn't seem like a day that ended higher than it opened, but here we are, and I don't think the rally is over.
Doesn't look like it. I mean, I think it's a very high probability in the next two trading sessions we make a new all-time high. I'm not calling it. This isn't advice. I'm talking probabilities.
All right, let's get through one more market here. Let's take a look at crude oil. I do have to get going in just a minute. Family to go up. But let's take a look at crude oil, Coach Paul. I was looking to buy crude oil yesterday. I actually did buy crude oil a couple of times yesterday, uh, but no one else was buying it, so I had to get out. What are we looking at here on the daily in crude?
To the bottom of the range, did we close the
That's the
lowest?
lowest close we've had.
So it's getting momentum to the downside.
Yeah,
We're under the 200 for the second day. Looking it's picking momentum. It's looking bearish. Maybe someone gets their wish of $55 oil, but I still won't see $1.98 gas where I am at. We'll talk about basis some other time, but yeah, gaining moment. It's gaining momentum. It's not. It's breaking out of the range. So what do I mean by breaking out of the range? It's the lowest close in this sideways correction we've had since what? July.
this is the lowest close we've had since June.
Okay. So
Yeah, since June 10th. So a little different here.
I don't want to sell it in the hole, but I'll look for a rally, a buying. I'm looking for buying that fails because I can't say where, but it's
See what happens at 60. 60.69 is our closing price right here. Let's see what happens at that $60 level. Initially on that swing trade that I had, my stop was below 60. I saw a lot of stuff that I just didn't like for a long trade here. And the trade so far has been Coach Paul, and of course they wait until I get into it to change the play. But the trade has been buy it in the low of this range, 61.50 area. And I did buy last night. I bought last night at 66. But then I saw this candle right here. Under the 200 moving average. And this candle right here, Coach Paul, 62.50s rejects. And that is kind of a J trade to the downside.
yeah, it's buying against the trend. And look at it on a candle basis. What do you call that? I mean, that call it what you want to. I call it failed buying. There was buying there, price wise. We never. That's an island top. So what it means is all that buying in that time frame, in that candle, meant it was failure off the get go. That's an important level, and it probably stuck out to you. And
Uh,
as it
as,
went lower, you're like,
as soon as I saw this, I was just like, okay. To be honest, I was long in this account, in this TopstepX account. So I was long micros in my personal account. In TopstepX account, I was long 5 minis because I wanted to be assertive with this trade. 61.66. I bought it back on the way back up, and I was risking this low, so I was risking probably about $600. When I saw this, immediately I have to scale that position, cut it in half, and the stop goes to break even because that means a whole lot. That means a whole
well,
lot. That kind of price action in that short amount of time and in no follow through. You say it all the time, right? Even if you're not getting short, if I'm long, that's the time to get out, and that's exactly what that was for me.
well, nice exit.
Thank you.
You
Saved my
exited
account.
before the theater started on fire.
Right. Yeah. Yeah. And then, yeah, we just continued to sell from that point for the rest of the day. So nice move there in oil. Let's see what happens tomorrow at 60. 60.40 was the low of the day. Any other markets you want to us, Coach?
Well, we did the crude gold. Really, the rest of these markets. Let's look at soybeans. It's Bitcoin is having a moment here.
Yes, it is.
Now, the rally, let's start from the opening last night. This daily is gaining momentum, but we had urgency last night. Difference between the NASDAQ and Bitcoin is there was no gap and finished near the highs of the day. We had urgency from early. Look at, we never, did we ever close under VWAP?
One time here, 12:30 Central Time, but that was the
On
only
light
one.
volume.
On light volume, yeah, that was the only one.
Yeah.
Strong move in micro Bitcoin. Almost near all-time highs again, right? Close. 126,675. So we're less than 5% away.
Yeah, and it's gaining traction. I wonder if, that's a strong V type of move. Where's the 200-day moving average? Was a little farther below this. It was getting close. But this area, we make a new all-time high, and it's going to be probably another leg up.
Looks like a really strong move. Looked like we didn't get back down to those 100,000s. I think a lot of people were looking at that. I saw people talk about 50,000 on Twitter. Bitcoin said nope. Good. Found the dip. We bought it. Now it looks ready to test those all-time highs.
And look at the weekly gap. You opened on a big gap Sunday night.
I haven't looked back.
And we're talking, wait for it to fill the gap.
Yeah, never going to happen, especially not in Bitcoin, right? There are no gaps in Bitcoin.
There are no gap, right? That's only exactly that's where I was going. The futures, we could see that in gold, but gold doesn't, the cash market doesn't gap. It's open all the time. But that was a pretty good move last night. There was not much heat. And it's diverging from equities.
A little bit
So
here.
now
we got a couple questions. Got a couple questions in the chat. We can run through these real quick. We had a question. This is from Jared. What can prepare one to look for a short in gold like today? Just watching how markets respond at all-time highs. Sometimes the market is going to respond at an all-time high by running it. In this case, the market made a one-tick all-time high or six-tick all-time high, and we didn't find any buyers. Do you come into a day like today looking to short it? Probably wouldn't, because we don't always get this response. But if you read how the market responds, then it can say, okay, yeah, hey, you know what? Here's a short. And then you got to have a setup, right, to take it. It's not just well, hey, it's at all-time high, so I should short it. There has to be a reason, right? And we saw it today. One of the examples, that urgency trade to the downside, but whatever setup that you have has to confirm in that time frame that you're looking for. Anything else you got, Coach Paul?
There was a question here. Coach Paul, when you were a floor trader, was opening range breakout a valid strategy?
Strategy.
I think you meant to say strategy during markets back then. I love it said tragedy, because great strategies can turn into tragedies if you're not disciplined. But yeah, actually the biggest traders that had the biggest volume were near the biggest brokers, filling brokers. So out of that, they would get an imbalance in the first minute. What do I mean by that? They have an opening range, and it was officially the first minute. So that was the official. I was a pit reporter for the exchange. It was really important. You set the first minute's range was the opening range, and brokers really were, because they get hung if their fills weren't in that range. It was a first, but going into opening range breakout, the biggest traders, the top step traders who took the biggest volume would get an imbalance. Now, what do I mean? They got edges. So to make it simple, say 1,000. If he might have traded 1,000 on the first minute, and then it's simple. He got an edge, so he sold 600 at 05 and bought 300 at even. He's got some meat on the bone, made some money, but what's the imbalance?
300.
300 on what side?
You said he sold 6 and bought 3, so
Yep.
short 3.
Okay. Now that's the imbalance, and he's holding it. Two ways this can go, that opening range breakout. He's got a big, if you were up there, you got paid to be there. I just said, I mean, you get made 5 ticks on 300, right? I think that's, but here's, if he is short 300 or she, and it breaks the high of the opening range the next minute. Now, there's an imbalance that came from the public, and that trader's holding it. You can be stubborn and be a gambler and say, oh, they're wrong, I'm right, or he's got some information. This market was bought, and it's in the paper, the public's coming in buying more. I'm short 300. I sold them. I'm short from 6. It's 7 bid now. Opening range, breakout. It's urgency.
Yep.
You can't, not going to be a top step trader very long, but just holds on to it. But it got some valuable information. It's got a good probability of continuation. Not going to wait for maybe bid 6, but immediately what usually they did is pay 7 for 600. Now I'm on the right side of this. And if I can't get enough, pay 8 and keep running it until you find some volume on the other side. And that was an opening range breakout. And those guys made tens of millions of dollars a year.
There we go. Good stuff, Coach Paul. Jared says the range wasn't as wide as it is now. I'm sure, just like anything, it depends. Depends on the day. Depends on who was on the book. Right?
Well, it's the volatility.
It depends on the volatility. And
the volatility, the range is the price. So in NASDAQ, say the floor really stopped trading. I mean, the volume left about 15 years ago. Completely. I mean, it would even maybe a little. Let's just say 15. But what I'm saying is that the 15 years ago, what was the NASDAQ was at like 7,000?
So just naturally, it's going to be smaller ranges.
Naturally,
it's going to be smaller ranges. The NASDAQ is 12x.
Yeah. So and there's good or bad. I'm not going to make a subjective opinion here. It's just different. Now, there's not a pool of locals where all the orders went into one pit. The local community, the members, took the opposite side of that and cushioned it. And then there was much more liquidity on demand. Now, just turn off the machine. if you were going to be a top step trader, you couldn't just back off. Or the broker or their customer is going to find another place because they can't afford that slippage. So maybe I went a little too far here, but that's what liquidity and opening range is, where the big volume comes from. It's important to understand. I've come 180 degrees. We talk about this in the green room.
Yeah, those
I
are
used to
great
wait.
trades to look for.
Now I'm a complete. The earlier the better. Go lose quick, lose cheap, or get in early and hold on.
In this case, in the equities and gold, if you held on, you had a pretty good trading day today. So those urgency setups are trades that we look for. But again, you got to execute the trade when it sets up. Coach Paul, anything you got before we go for the day? Got one more day to end the week.
I'm just going to go to what I always say: trade a plan, plan the trade, bring consistency to your decision making. When you do that, you can build your account and you can build a reliable trading process. So
thank you for that, Coach
begin
Paul. Right?
Begin as soon as you can to do that.
Thank you for that, Coach Paul. Plan your trades, trade your plan. Consistency in your process is what I like what you said there. You're not always going to get the same results every day because, of course, we got to lose. But consistent in your process, you can start to measure when things are working and when they're not. We got Coach Hoop doing a class in a couple minutes. Actually, Coach Hoop starts now at 5 p.m. Central Time, so in about 45 minutes. Coach Robert is doing a class in Discord right now. And we have Coach Ray and Coach Vince at 6 and 7 p.m. Central Time. We have Coach Dakota with Slow Markets tonight, 7:30. I think Barron is joining him. And we have Aaron with the London Trade tomorrow morning, 1:30. On entertainment education for you on TopstepTV. For you tune in. If you haven't done so already, hit that thumbs up button. We appreciate you all for joining. Always, we got one more day. Don't try to make your week or ruin your week by doing something that you have not measured tomorrow. And we will talk to you all then. Coach Paul, you have a good one. Thanks, Coach Ray, for helping us run this too.
All right. Bye.